pair of the U.S. West Texas Intermediate and the London Brent crude, which is benchmarked to Nigeria's budget, are all rallying very strongly because of those voluntary supply cuts from Saudi Arabia and Russia. So the Nigerian exchange says 1.8 trillion naira was added to the market value in July on the back of strong bargain hunting. Meanwhile, the raft of second quarter and first half earnings releases over the past 2 weeks have revealed billions of naira in losses by heavyweight companies, mainly in the manufacturing and telecom segments of the market. So let's do a bit of what we call facts behind the figures now with Johnson Chukwu. He's the group CEO at Carrier Asset Management. Is live here in the studio with me. Chukwu is also a licensed market dealer. Thanks for coming in, and we appreciate your time.
Thank you for having me.
This is perhaps not a good time to get off the trading engine. but we appreciate your making it here tonight. Let's just have this conversation. Tell me what the major headwinds were for the big listed manufacturers in the first half of the year based on the earnings releases we've seen so far.
I think the greatest challenge we've had based on the published account so far are foreign exchange losses. Virtually all the companies but one or two. I think basically it's only one I've seen that had did not record any loss. That is Lafarge. Virtually all the manufacturing companies, including the financial institutions, all recorded exchange rate losses. And these losses are huge. I mean, a company like Nestle has thrown its shareholders' fund into negative. And that, for me, should be of concern, because it simply means the shareholders will now be called upon to recapitalize the company just because of the exchange rate losses.
I'm not sure we've seen that in
yeah, if you look at the half-year result of
Nestle,
their shareholders' fund turned negative.
That's one of the biggest food companies. In fact, the largest in Nigeria, by the way, not one, but
yeah, absolutely. It also shows that the company was not properly capitalized, was not well capitalized. Because if it lost about 60 billion in exchange rate movement, and that made it to have a negative shareholders' fund, that could indicate that over time the company's aggressive dividend payment policy did not allow for accumulation of reserves.
But 60 billion is a lot of money on the table.
Yeah, but if you consider that what other companies lost, a bank like First Bank lost 98 billion and still ended up with a profit before tax of
First Bank deals, FBNH deals in cash. So
yes, beyond that,
maybe you never get it wrong if you
look at MTN. MTN lost about 130 billion. They still ended up with a profit figure that was just marginally below the last year's half-year performance. You look at other companies. Cadbury also lost money, about 22 billion. Of course, Cadbury is not the same size with Nestle.
Yes.
But if you consider the fact Dangote Cement also lost money about 103 billion, they still end up with a profit. So the basic thing is that the fact that a loss of 60 billion could throw Nestle into negative implied that the capitalization, there was a question mark on their capitalization.
Ab initio.
Yes.
So that has to be looked into. But again, when you look at the rest of the manufacturing, what else bit into their profit, their bottom line? Many of them reporting negative earnings per share. Was it just about FX?
I think what was common among all of them was FX losses. There are other differences in terms of cost of production. Those who have an elevated cost of production.
Net finance cost.
Yeah, they have the net finance cost.
Yes.
But all these factors, but what you could say was common among almost all the reported financials were the issue of exchange rate losses. Of course, we understand what went wrong. Basic thing is that virtually all these companies had liabilities, current liabilities in dollar terms. And because the assets had been sold, probably some of the liabilities were input material for manufacturing activity, for goods that had been sold, but because they had lines from their suppliers, so they did not have any compelling need to pay immediately, or they did not even be unable to access foreign exchange from the central bank to pay as those liabilities became due. And they kept bidding for FX. But now that the exchange rate has been harmonized, or exchange rate has been harmonized to at a higher level, yes, of 750 and above. Yeah. So what has happened to them is that they had to make up for that difference because the liabilities are current. There is no existing asset that will also have to be revalued to reflect that increase in the value of the liability. And that's why it has to be recognized in the profit and loss.
So are we seeing a pattern here in terms of how the macroeconomic policy is hurting the companies?
Yes, there's a clear pattern, of course. A couple of things. One, you have the instance where the companies are making provisions or writing off part of their earnings, previous earnings, based on the exchange rate movement. Then you also are going to see a slowdown in demand because cost of production would go up. Then that means the final cost of the manufactured goods would increase. At the same time, the average consumer is suffering from huge loss of purchasing power coming from exchange rate movement and inflation rate. Oh. So that will reduce the demand that will affect virtually every business operator in the country.
For companies like Nigerian breweries, Guinness, those in consumer goods space and what of that, they were able to raise prices over the last 1-2 years as things begin to get a little bit tight. Do you think they have room to do that right now? No. with fuel prices up and exchange rate also following in tandem?
No, I think they are going to get a point where they have minimal headroom. There could be instances where they could adjust marginally. But the issue is that demand is collapsing.
Yeah, we saw Heineken's International reporting 22% decline.
Yes,
because there's so much decline in demand from Africa, Nigeria, and a few other countries.
So that's the thing. Once there is no strong demand, the purchasing power of the average consumer has deteriorated significantly. So it then means that the average trader, average business operator, the average business manufacturer cannot pass on the increase in costs to the consumer, because you can only pass on that if the consumer has the capacity to pay higher prices. But the average consumer today is basically adjusting their household consumption and focusing on primary basic food items, basic clothing. People are struggling to pay for transport fares to their various locations or various business areas. They are struggling to buy enough food to feed their families. So at that point, you are going to see a change in lifestyle. And that lifestyle change will mean that average consumers will begin to whittle down their consumption of what is not absolutely necessary and focus on those critical consumptions that are necessary for their livelihood.
So we started the year, we're discussing the first half of the year. So we started the new year with all the preparations for the February elections. Then you've got the new Naira Notes program exercise. And then we got the elections, and then we get into inauguration and all of that. We've got the full subsidy removal, and of course the exchange rate, central bank tinkering the exchange rate and try to move the I&E window numbers together and allowed it to free float in a manner of speaking. So do you think these headwinds are strong enough, and do you think they will blow up into the second half of the year where we are right now?
I think we're going to see more of those impact on the second half of the year. Of course, you also always have in economic terms what you call delayed response. So the full impact of these policies we mentioned will actually manifest in the second half of the year. Take for instance the issue of harmonization of exchange rate. Today, the volume of transactions you saw in the first half of the year are going to be likely materially higher than what you're going to see in the second half of the year, because you have seen a movement in the price level, the cost level, because of change in exchange rates. So, but you're not seeing a commensurate movement in income. So without a commensurate movement in income, you will see a slowdown in consumption.
Well, the Mr. President promised yesterday evening, I'm not sure if you missed that dinner time, I'm not sure you missed it, but of course,
no, I couldn't have
you wouldn't have missed it. But again, so you spoke about those palliatives and supporting small nano businesses to about 100 billion, runs to about 100 and whatever million in dollar terms. So do you think that will begin to catalyze in the second half of the year, or is going to take a bit longer?
You know, when I talk about the lag effect, let's look at those things that the president said he would do. There's a 125 billion that's going to go to micro, small, and medium-scale enterprises. Yes. 50 billion of that will go to nano enterprises in form of grants.
Yes.
Of which there will be about 113 per local government.
Yes.
Of the 774 local governments.
Yes.
So, but the basic thing is that before, and they have given a timeline of between now and March next year, it will take time to identify those beneficiaries. It's not like they have a comprehensive and reliable database of those beneficiaries. So let's assume it takes another 2 months to compile the list of those beneficiaries, and then you begin to disburse to them. And you have to also pre-qualify them and be sure they know what they want to do with the money.
So it's not free lunch.
Yes, I know that you're going to give them free lunch.
It's not free lunch.
So that process could take 3-4 months to do. So at that point, you're almost coming to the end of this
this year.
Yeah, this year.
Yeah.
Then you talk of the second aspect, the same 5 billion that will go to small and medium enterprises, of which each of them will get about 50,000 to 1 million. Then you will also need to pre-qualify those ones and take time to disburse to them. Then you talk of the 100 billion that will go for 30,000 CNG powered buses.
Yes.
those buses have to be manufactured. They have to be shipped to the country. They have to be cleared. I'm not sure that they are somewhere in somebody's warehouse waiting to be shipped. So you have to look at the time lag it will take to manufacture them. You move further to the issue of agriculture, 200 billion going to agriculture for the cultivation of cereals, which include cassava, tuber. Cassava is what they mentioned. Cereals is rice, wheat, and maize.
Yes.
So if you look at those things, they have a cycle.
Yes.
And in case of maize, the earliest cycle of maize is about 8 to 10 weeks. And that's for sweet corn maize. For our local maize, it's almost 3 months.
Yes, correct.
So if you're talking about a planting that takes place in September, you're talking about a harvest in November.
Into December.
So into December. That's the end. Rice has a cycle of about 4 months. 4 to 5 months. You're also not going to have, you're likely going to get the harvest before January. And then you also look at how do you identify those beneficiaries for the 200 billion disbursement. Then you talk of, you have the 200 billion going to agriculture. You have 125 billion going to the small and medium scale enterprise. You have 75 billion going to the manufacturers, which each of them is supposed to get about 1 billion naira. Then those manufacturers, you have to ask them what exactly they want to do. How do you pre-qualify them? How do you make sure you put in place? Because there's going to be an on-lending arrangement through the commercial banks. Yes. The commercial banks have to act as guarantors. Yeah. The commercial bank have to go through a process of credit approval for each of these beneficiaries. Yes. Those things will take time.
We need to, so all of this put together, so what should investors prepare for? As far as what you call, in terms of dividend payments by companies at the end of this year, what are the broader implications for institutional investors, those who hold shares in the market?
Well, I think the first thing is that you have to look at the balance sheet of each of the operators. Some of the companies have effectively weathered the exchange rate loss, provided that Naira does not shift further southwards.
But you just saw that it shifted today. I just put it out to tell that it
so
shifted to
if that continues, it simply means at the end of the second half of the year, they are going to book additional exchange rate losses. Yes. Unless they are able to close out their FX position, which I don't think there's enough liquidity today for them to close those FX positions. So we should prepare that in terms of corporate performance this year, at the end of the year, it may not be as we had expected because of these losses. But the good thing is a lot of the companies, particularly the big corporates, have a huge balance sheet to absorb those losses. For the small commercial businesses, that's where the problem is going to come from. But many of the commercial businesses are not quoted. But in terms of performance, a lot of the small companies who are importers will run into financial difficulties because they don't have the liquidity to cover their FX exposure now with the banks. And also that means that the banks, we should expect that the banks will record increased level of non-performing loans.
That gives you a sense of where to put your money in the banks.
Well,
no, it's okay. That's nice. It's nice. Thank you. It's good to have it. Let's leave it there for tonight. The big banks are yet to report. So let's leave it that. You're going to come back when the big banks start rolling in the big money. But if there's money to be made, let's be the first to know. Thank you so much for coming through. Johnson Chukwu, market professional and the group CEO at Carry Asset Management.